This is True Multifamily, the show where we dive in on what really happens after closing a multifamily property. We're going to expose the role of asset manager. That's the person who has the responsibility of seeing the vision, executing the plan, and managing people, budgets, and timelines, all to deliver returns for our investors. These are the real struggles, the real victories, and the real stories of asset management. Welcome back to another episode of True Multifamily. I am here with Jonathan Barr of JB2 Investments. Jonathan, thank you so much for coming on the show today.
Thank you for having me.
Yeah, man. Glad to have you here. We had a great chat pre-podcast, and your story is so interesting. So I would love for you to share that with us. Tell the audience sort of how you got into real estate and what you're doing now.
Yeah, so I started after the last recession, which is funny because we're in a recession now, right? So it kind of reminds me of some of those times back then. But graduated from college 2008, couldn't find a job. My family's been in the flip business since I was basically born. So my mom was basically said, come jump on the company with us. They had lost some money during the last recession. And so I kind of went back to help them rebuild things. I mean, I was a little reluctant because the last thing you want to do is go work for your parents, right?
Right.
But it was a blessing. I went back, helped them rebuild things, went to the foreclosure auctions, bought short sales, REOs, probates, all kinds of properties. And in a 10-year span, we did about 400 deals, did some small development deals, 6 to 12 unit townhouse projects, infill in LA, and also had a small portfolio of 1 to 4 unit deals in LA that I managed and property managed myself. So I've been in the trenches. And then in November 2019, bought our first larger building in Kansas City. And about 4 or 5 months ago, closed on a 72 unit in Oklahoma City. And we're kind of looking to do more from there.
Wow. Okay. So first 400 flips over 10 years. That's it's almost one a week, right? It's a lot. Yep. It's a lot happening. Really awesome. Cool family business to be in, by the way. So that's gotta be fun. Cool. Was it though? What, like, really, how was sort of working, a lot of people, they're building businesses, finding partners, but you sort of had the family structure there already. What was that like?
I mean, it definitely has its sets of challenges. Working for a mom, there's definitely, there can be conflict that you deal with in those situations, but at the same time, it's amazing working for your family because you go to work every day and there's people that love you and care for you and want the best for you. So they look out for you more than any other partner is going to look out for you, That's awesome. Yeah. So the benefits outweigh the downsides from it. Okay. And that's why I'm still working with my brother now. So. Okay. So that's what the next thing I was going to ask you is, so now you've branched out into multifamily in Kansas City and in Oklahoma. So that's JB2, right? You and your brother are doing separate from the other family business at this point.
Got it. Were they just not interested in that, or you guys wanted to do something else? What was that?
Yeah, I always wanted it because in 2011, I bought a few duplexes in LA that appreciated 400% over that 10-year period. Yeah. And so I sold them all in the last year to invest in this multifamily deals, along with raising some funds from others as well. And just that business was never going to go in that direction. And so I came to the conclusion that if I ever really wanted to do this, I was going to have to do it on my own. And so that's what we decided to do.
Okay. All right. I appreciate that. So you're in Southern California. Why Kansas City and Oklahoma?
Initially Kansas City because my wife has family there.
Okay.
And so I was kind of just bored one Christmas looking at properties. I was like, these numbers look interesting. Started talking to brokers, checking out property, checking out neighborhoods, and really like what I saw. And eventually it took me a few years to pull the trigger because all I'd known was LA real estate. So for me to go anywhere outside of LA was like the craziest idea, especially within my own family.
Right.
They thought I was nuts. Yeah. I mean, they don't think I'm as nuts anymore, but, and then we started looking for, that was only a 14 unit deal. Okay. So we wanted to do a 50 plus unit deal. And I guess the secret's out about Kansas City because everyone from California and New York is there now and pushing up the prices. So we just couldn't find anything that made sense. So I just opened up the radius a few hundred miles and we ended up in Oklahoma City and
Got it.
found the deal and made it happen.
Got it. Okay. All right. So, and that was in 2019, you said, right?
So Kansas City was in 2019. The Oklahoma City we closed September 2020.
Okay. Awesome.
Yeah.
So, that brings up a question about management. And I know that your True Multifamily story you're going to share with us is really all about management. And so let's just talk about when you're looking at this 72 unit property, 72 unit property. What's your thoughts on management? I know you've done self-management in California. Are you thinking I'm going to self-manage this property, hundreds of miles away, or bringing on a third party? Let's talk about the thought process there.
Yeah, I mean, because we're not on the ground and because we don't have experience with larger multifamily or managing larger multifamily, we felt like we needed to have someone that has more units in the area to take over and is more a professional on the day-to-day. So we did end up hiring a property manager that's also an owner operator that's kind of around our age and kind of growing his business as well. So we felt like it was kind of a strategic alliance there.
Okay.
That worked.
And what was the structure? Are they putting full-time employees on is it big enough to support full-time staff?
Yeah. So we have a full-time PM currently, and we have a full-time maintenance person. We are speaking now about going half-time with that property manager now that we've owned it for like 4 or 5 months and it's mostly stabilized at this point. We've got rid of some of the riffraff and clean things up and just everything's kind of going on semi-autopilot at this point.
Right. That makes sense to me. Normally we see like one manager and one maintenance for 100 units, right, in the larger multifamily space. So it's probably costing you more per unit than you want to be spending to have that full-time person there.
Yeah, we're doing really well, even with the full-time person. We're actually beating projections by 67%. I just finalized our 2020 report and sent it right before.
So you know what? That manager's doing their job, and hey, if they work hard the first 4 hours a day and they can sit back the second 4 hours a day, maybe that's fine. Let that keep rolling. 67%. I stand corrected, and I'm very happy for you. That's awesome. But let's talk about that management company, because you told me ahead of time that there was some unexpected fees and just some challenges just in operations. But let's talk about the fees, because what is it that you thought the fees would be going into it, and what happened?
It's just most of the fees that they charge, like late fees, application fees, administration fees to the tenants, they were passing most of those over to themselves. Okay. Which is a little bit rare. And I was surprised by that. It wasn't 100% clear. So that's another thing. When you have any sort of contract, make sure to have your attorney review everything, even if it's a small contract, because there could be, especially with a property manager, because they could put some fees in there that you don't notice, and then you don't notice until you get your first P&L and you're like, what's this? Right. So like the big one was late fees. So they were passing that through, and because we're going to grow with them, we were able to renegotiate that and get those back. And then there was like some other weird processing fee that we're working on. So I think moving forward, we'll be able to negotiate those things better. And we're still obviously doing super well on the property. That doesn't really matter that much, but it's definitely something to be careful with. Yeah.
So, on a property like that, when you have third-party management, I've experienced something very similar on a 41 unit that we've had, where the fees are a much bigger deal than, on our 200 unit or 300 unit properties that we have. It's much more cut and dry. It's like just you pay the salaries, and there's a flat percentage of everything that comes in, and it's just a percentage. But on these smaller properties, the 40, 70 unit properties, it seems like there's a lot more room for negotiation there, and people trying to slip things in. I've also heard of some properties and managers in that size range, they still want a half month of when they place a tenant, they still want to take like half a month fee or something like that. So definitely have to watch that and read that contract really closely, because that can actually really impact your bottom line.
It really can. And then you start to realize, oh, the management business might not be a bad business.
Well, yeah, if they're taking all your fees. The other side of that is the management, is the maintenance. And are they marking up hours on the maintenance side as well, right?
Yeah.
I'll look at an invoice and be like, there's no way this water heater costs that much. And then you see there's $200 or $300 of markup in there. And so you definitely have to have those discussions ahead of time when you're interviewing that management company.
Yes.
So talk to us about the, go ahead.
So I want to say one thing. So like during the escrow process, there's so much going on, right?
Mm-hmm.
So you just need to slow down and have those conversations, review that contract, have that back and forth, and just make sure you're looking at that contract from the get-go so you have time to work on it. So you're not at the closing table looking at the contract and feeling pressure to sign this contract just to like move things forward,
I would argue look at that contract before you even have a deal, right? So
or that
for me, it's like we pick our markets, then we find our team, and that includes management. And so we will look and we will get a copy of the management agreement when we're interviewing them, because I want to be able to make those that understanding of what's happening in that contract with a calm head, because you're right. When you're under escrow, it's like from the day you hear back that your offer is accepted to the closing day, it's just a sprint in 100 directions and you can't think straight and you're just trying to get this thing done. And so you'll sign anything and okay, looks fine. I took this 20-page management agreement, read it in, 30 seconds and seems fine. So great tip is read that from a place of calmness and as early as possible and take your time with it. I totally agree. So let's continue the management conversation, because you also told me that, your managers, the management company was spearheading a unit conversion that you were doing, and you ran into some trouble. So set it up. Tell us, just what the situation was, what you're trying to do, and how the manager was involved.
Sure. So when we were in escrow, we realized that there was a pool. There used to be a pool in the property. There's a pool room that wasn't being used for anything. We're like, well, we could turn this into a studio. So we got bids on it during the process. And then after we closed escrow, we were finalizing all those bids. And the mistake that we made was allowing the property manager to spearhead that project, because it was a larger CapEx project. We should have taken control of it, because they missed like some electrical work that needed to be done. And I think, they're focusing on managing the property, not focusing on the project. And if we were more focused on that project itself, it would be done by now. And we're still finalizing a couple things on that project. So being careful what CapEx stuff you allow them to manage. If it's a bigger part of the project, you should take it over. If it's over $10,000, you don't want them to touch the project, I would say.
So I'm going to challenge you on that, because not everyone comes from a 10-year history of 400 flips, right? So you obviously have a very extensive construction background, and you probably would be able to spot these things very easily, right? But let's say you have less of that. I would have flown out my
electrician she was talking about.
Right. It probably would have been cheaper, right? Just because of how much business you've done with that person, right?
Yeah.
So for someone that maybe has not done that level of work, they're kind of forced to rely on their property management company. So any advice there where, okay, my hands are tied. I don't have another crew in another place that I can bring in. What should I be asking? What kind of questions? What should I be looking for that maybe can give me a little more confidence as I'm hiring a property manager to do this work?
I think one big thing is getting a few bids on everything, because I think prices can vary so drastically from different vendors. And also talking to those vendors directly yourself, not just relying on the property manager to talk to them, or be on a conference call with them. So make sure the vendor understands where you're coming from, make sure the property manager is clear and everyone's on the same page.
Got it. Yeah, I agree. We've also had some great property managers that have, even if they don't have in-house construction, they'll have a construction expert or renovation expert, like a property improvement person. And their job is to kind of act as GC for you. And so, someone that you can rely on to walk through a property and get a good feel, to coordinate the subs. But if your property manager does not have that person in place, then someone has to fill up that void. And if it's a person that's normally leasing your property, that's a very different skill set than someone that's managing the renovations.
Yes, I agree. And usually if they have that construction person, they'll probably charge some kind of fee to do that,
Yep.
right?
Yep. Yeah. And for us, that's okay. Our people usually charge between 5 and 7% usually on our projects, but it's worth it, especially if you're investing out of state, and you don't have.
And if it could save you a couple months and get things leased faster and done, having that person, it'll easily pay for itself.
Right. Right. But could be that the management company doesn't have that person, or they're not very good, or just something gets lost. And things do get lost. Sometimes we miss that we're going to need an electrical permit or something like that, right? These things tend to happen.
Or that we needed more outlets or switches or whatever, stuff like that.
Yeah. There's always something, right?
Yeah.
So what, give us a little more color on that. So at some point you realized they were not doing a good job, or you didn't have enough electrical outlets in the plan. I mean, what sort of happened?
The issue that happened was the person that we hired to do the work didn't do a good job contemplating the things, and they were relying too much on that person to contemplate each part of the project.
The PM company leaning too hard on the sub.
Contractor, vendor, almost like glorified handyman doing the work.
Got it. Yeah.
And he just missed it. I mean, the good thing, he's going to come back and fix like drywall or like do things for free because he feels like he kind of messed up too. And he's owning up to that, right? Because he does a lot of work for them.
So who realized there was a problem?
I think that contractor, after he went and he started to finalize things and realized, I don't have a switch here, I don't have a plug here.
Okay. He turned himself in.
Yeah.
Okay.
And like, I don't think this sub panel is gonna do like all that kind of stuff.
Man. It's bad if they like throw up their hands like, wait a minute, I think I messed up. Like, that's a hard conversation for someone to tell you. So, okay. And then what's the corrective action? I mean, now
we're just getting bids from different people on electrical. And I even I connect with a lot of people on Twitter, and there's like a local guy that I connected with on Twitter that connected me to an electrician that I'm having get out there. So like looking in different places for different contacts along with our PM's contacts as well.
I will tell you that is a great tip. We invest in Kentucky, and in the town in Kentucky we invest in, there is a investor Facebook group. And I will see our PM on there and other people, and they'll be like, we have this project going on, and the power of social media is great. Getting referrals from people that are actually out doing it. Definitely worth a great tip. Like, look for wherever your property is, join the local investment Facebook group and try to get some contacts that way, or Twitter or whatever, wherever the people are, go there, talk to them.
Yep. And then I was actually talking to my electrician yesterday, and he's like, hey, if it's a big enough job, I'll fly out there for like a couple of weeks and do it.
Yeah. Yeah. I mean, hey, you built up a loyal following and friend there, and someone that's done a lot of work for you guys. So why not? Right. And if you did the numbers, and considering the rework that you're going to have to do and the time and the lost rent, it might have been cheaper to send him out there in the first place.
Fly him out there, get him a hotel and whatever. Yeah.
Right. And then, sometimes just having someone you trust look at the project is so much worth it. Right.
Definitely.
So let's talk then about, this sort of leads us to the next phase of like, how involved should I be as an asset manager and an owner? I hire this property management company. I trust that they're hiring the right people. But I have to verify. So let's talk about micromanagement and sort of that line between doing too much and letting them breathe and letting them do their own thing.
Yep. So right now, how we have it set up is we have a weekly call where we discuss, delinquency, vacancies, leasing activity, any numbers in the P&L or anything that look off or are over budget, that kind of stuff. But like you said, there's a point where you're micromanaging or you're not doing quite enough. And we hit that point of micromanaging a bit where we were kind of hitting more vacancy than we would have liked to see. And I told them, hey, let's at the end of each day, let me know what kind of activity was going on. And that definitely was a little too much, I would say, because at that point, the owner of the PM called me. He's like, hey, like, you need to trust us and kind of like let us do our thing. And I was like, all right, fine. But and then he didn't know that. I was like, we're about to have like 8 vacant units out of 72, which is a lot. And I was a little concerned. And he's like, oh, I didn't know it was that many. I was like, yeah, that's why. He's like, well, don't worry, we're gonna get it done, and we're doing this, that. We're marketing it here, there, and I even have, like, on the apartments.com, I have access to the account, so I see how many hits we're getting, like what contacts are coming in. So like on the call, we could even talk like, how did the call go with Jerry here that called in or whatever,
That I think is micro. I will say that is a micro level, but
I'm just saying, if we're having any issues, like,
yeah. No, I mean, listen, at the end of the day, you ultimately are responsible for the success of your asset. And that includes the people, the management company, the people that are working on the property. And so if you're not confident that the work is getting done, then you have to step in, right? And especially if you're doing some kind of syndication or you have a lot of investors and partners, they're counting on you, right? As an asset manager, they're counting on you to keep their best interests and keep their money safe. So for me, I especially actually with COVID, we started doing something similar where we wanted to track collections, visits, tours on a daily basis. We made it a little, it wasn't like they had to send me a report, but we have a shared Google sheet, and actually still continuing now, almost a year later, where every day I can see how much we collected and how much our delinquency is, how many people came to the office. And it's actually very helpful for us to sort of measure the health really month to month as well. So I can log on
we get a report
say,
like that.
Yeah. Okay, good.
On a weekly basis, not on a daily basis, but still weekly. Like, we have our meeting, and the day before they send me this weekly report, and so I could have an idea, and then we go through it, and I also have access to, I have a Yardi like owner portal. Yep. So in real time, I could see a lot what's going on without having even asked them anything.
Yardi's great. Yeah, I'm right there with you. My dog. Great. So we're going to head towards the end of the show here. This has been really, really great information. Love your story. Love everything that you're doing. I'm going to give you a chance to promote yourself and your company, but give us, before that, I'm going to have you promote, but I want you to think about, I'm going to have you give us your true multifamily tip. Someone says, Jonathan, I want to invest in multifamily real estate. What is your piece of advice that you're going to give them? But before we do that, let's go ahead and have you tell the audience how they can get in touch with you, and where you're on social media and all that.
I'm most active on Twitter, so you could just look me up at JB2 Investments. And you can go to our website, jb2investments.com, or email me at jb@jb2investments.com. And I write a lot. I put out a weekly blog about what we're doing. Actually, a lot of asset management, due diligence kind of stuff is what I write about.
Great. Well, our audience will definitely love that. They eat that up. So great. So thank you guys. If you missed any of that, you can check out our website, truemultifamily.show. All of Jonathan's links and social profiles will be up there as well. So Jonathan, your true multifamily tip. Someone says, Jonathan, I want to get into multifamily investing. What is it that you tell them?
I would say 2 things. One is always think outside the box. Like, there's kind of a prescribed way to do things, and this is a very competitive space, and you need to see how to differentiate yourself. Like, for example, we're going direct to owners a lot now. We're having a focus on that to try to beat some of the competition and get in front of owners directly. And then number 2, thinking differently, is our concept is more to hold forever instead of 5 to 7 years. We are going to refi in year 4 or 5, but our idea is return most of the money and then keep holding and improving it in the future. maybe at some point selling and 1031 into a better, larger asset.
Got it. Love it. Love those tips. Love that advice. And
Yep.
could not agree more. So, Jonathan, thank you so much for coming on the show. Really appreciate it. If you guys like this episode, please like, subscribe, and share it. We appreciate it. We'll see you guys next time.
Thanks for listening to another episode. Check out our website at truemultifamily.show. And if you have an amazing story to tell, share it on our Facebook community, and you might just be the next guest on the show. We're also on all other social networks. Just search True Multifamily. I'm really proud to have the show produced by our company, On Air Brands. Check us out at onairbrands.com. We also have an incredible, unique podcasting event that we would love for you to be a part of. Check that out at podmax.co.